I'm excited to introduce our next presenter, Sarah Kjellberg, head of iShares Sustainable ETFs at BlackRock. Sarah's going to be discussing a topic that's been top of minds for many investors, and that's sustainable investing. Before I toss the mic over to her, I just want to remind everybody once again, Sarah's going to take questions live from you at the end of her presentation. So make sure you type them out on the right-hand side of the YouTube screen there, and we will get to them at the very end. Welcome, Sarah.
Thank you so much. Hi, everyone, and thank you for joining us today and to Ally for the invitation. So what I'm going to do today is discuss the concept of sustainability, and particularly around how it relates to investing and thinking about investing from a long-term perspective. So with that, let me go ahead and pull up the presentation here. So sustainability has become a mainstream topic. What we're seeing is that there's a rise of products and services that incorporate sustainability, and consumers are starting to really vote with their dollars. It's becoming part of a company's brand, and we're also seeing more and more public companies that are issuing corporate sustainability reports. So let me advance here. When it comes to investing, sustainable investing has moved from really a fringe concept to the core of investors' portfolios. And we're seeing this through a number of different forces, mainly around the sense of urgency that we're seeing around issues like climate change, certainly gender equality, and as well as technology. I mean, technology has really afforded us the ability to capture data more systematically, and more research as it relates to environmental, social, and governance issues are pointing to the fact that this isn't just merely about values, but it's about achieving value, particularly, as I mentioned before, over the long term. So what am I going to be covering today? So really three topics. The first is why start with sustainable? And then the second is, talked about sustainable investing. What does that mean? And we'll zero in on ESG, environmental, social, and governance. And then finally, how has the landscape and product offering evolved, and how to get started with iShares Sustainable ETFs? So sustainable investing is really about investing in progress, and also recognizing that companies that are solving the world's biggest challenges may also be the best position for growth. And what we're seeing is society's changing attitudes towards sustainability really represents this structural shift that we believe is going to be realized over the medium to long-term horizon. So what we're seeing here is a quote from our CEO, Larry Fink, where he makes a pretty bold statement that we believe we're on the edge of a fundamental reshaping of finance. We believe there's going to be a significant reallocation of capital, meaning we're starting to see some of this capital flowing to more sustainable companies. And we believe it's around three key forces. And the first is climate change. The second is investor preference. And then finally, we're starting to see more and more institutional investors integrate ESG issues into their investment process. So, what we're hearing is certainly from our clients, certainly the way that BlackRock feels is that there is a sense of urgency as it relates to climate change. Over the last 5 years, it's been, total cost of billion-dollar, natural disasters has exceeded, over $500 billion. And so we're starting to see some of the impacts from a physical perspective, as well as society's overall reaction to climate events, which includes, regulatory push, as well as what we're seeing is some, companies really devote a lot of their resources to finding technological advancements. So the investor demand for sustainable investment solutions is really increasing across demographics. And, typically what we have heard is that, when surveys are conducted, that it's largely based on, women and millennials who really gravitates towards sustainable investing. And it was interesting, actually, Morningstar, produced this interesting report that surveyed the American population. And what they found was that at least 70% expressed a moderate level of interest overall. So again, not necessarily focused on specific demographics, but really all demographics. Last but not least, when we think about some of the large institutions like, public pension plans, insurance companies, and central banks, what we're finding is that they're increasingly focusing on sustainability-related investment risks. What we find is that these investors are really recognizing that these risks are investment risks. And so, one study showed that about 70% of institutional investors today have already started to implement ESG strategies. And so these forces are what will continue to drive what we believe persistent investor flows into sustainable investments. So let's start to get into the what, right? So when you hear ESG, the acronym for environmental, social, and governance, what does that really mean? And what does it really uncover for investors? So we believe ESG analysis is an important part of a robust overall investment process. So what ESG analysis really does is it helps investors really uncover, risks and opportunities that may not be covered in traditional financial analysis. So what we mean by that is, how effective a company is in managing, resources like whether the use of natural resources like water or energy, or their ability to adapt to the changing environment and advancements in technology. It can also help uncover risks. For example, things like poor data security practices, or even how impacted a company is, as it relates to extreme weather events, and certainly in areas like corporate governance, when we think about, accounting scandals or accounting frauds. And so as we think about these issues collectively, some of these can have a real financial impact. And so, in order to pursue, long-term risk-adjusted returns, we believe investors should really consider, the full set of risks and opportunities that really face a company. So now breaking down these three pillars. So, when we think about the environmental pillar, what are we really talking about? We're talking about, issues like climate change, pollution, as well as, waste management. It also can include, companies, once again, who might be investing in clean technology. And how impacted, right? We think about, some of these companies in terms of whether it's physical locations, or how do extreme weather events impact even their overall operations, and how are they ultimately managing against them? For the social pillar, this includes any type of risks that are related to humans. So we think about it in terms of human capital management. In the sector that I'm in, which is financial services, it's we need people, right? We need people to run operations. We also think about product liability and safety, as well as, data security. And then finally, in terms of governance, probably the best understood pillar, which is really focused around issues like, corporate governance. Their focus around ethics, any type of, issues related to corruption, and as I mentioned before, their accounting practices. So, being able to consider these issues can really help investors, gather more information about a company, and then enable a more comprehensive approach as it relates to investment opportunities. So let's talk about ESG in practice. And so, again, as mentioned before, ESG analysis can provide an additional lens into a company's potential long-term value by helping, to identify, potential risks that may not be captured in traditional financial analysis. So what we're showing you here is an example of two companies, right? So, they have quite similar, traditional profiles, right? So consistent profits. Company A and B both growing their dividends, and they also have a high market share. But if we were to apply an ESG lens, we're looking at different perspectives of this company, right? We're taking a look at, issues like, is the CEO's pay in line with its peers? Does this company also have, any, history of, data leaks? And then how satisfied are their employees, right? So if we take two of the same companies in the same industry, which one would you choose, right? So of course we would choose company A. So without having this additional ESG analysis, we may not be getting the proper look into these companies and specifically some of these issues that we believe are quite material. So let's just, take a look at how sustainable investing has evolved. And so, other terms that you might be familiar with include socially responsible, responsible investing, and really this started back in the 1960s, I should say. And it was really started by investors, largely, institutional investors. Think about religious organizations, even some pension plans that excluded certain industries. And so as we move through time, what we've evolved to is, again, because of forces like the data and being able to evaluate companies through this lens, we've moved to more of both, exclusions, right? We still find that investors don't want to own specific companies, like in areas like maybe it's tobacco, civilian firearms, thermal coal, et cetera. But that we've also evolved into, thinking about how we can be more inclusive. So inclusive of these companies that, may have better sustainability practices. So as we think about, some of these milestones, we've had companies who have started to issue, sustainability ratings like Morningstar and MSCI. And we've seen, more and more of, within the industry, there's, in 2017, you could see, 1,700 signatories that had signed on to the UN's Principles for Responsible Investment. Collectively, actually, as we get to 2020, that number is actually closer to 2,000, and we're talking about over 80 trillion in assets. So these are some of the largest investors in the world, some wealth firms. BlackRock is a signatory of the UNPRI. Essentially, your commitment is focused around integrating ESG into your investment process, as well as reporting out on it. So before we dive too deep into our platform, I think it's important to level set and talk specifically about what an ETF is. So ETFs are just like a mutual fund that trade on a stock exchange. So you could see the image here. ETFs have the benefit of mutual funds in that you have the diversification. You're not just buying one individual stock, but you get a diversified exposure. Of course, today, ETFs, globally have surpassed, trillions in assets, one of the fastest growing investment vehicles. So why use ETFs? So I talked about the diversification. So instead of having, potential individual stock risk by focusing on one company, if you want to express a view, you can buy one ticker and get a diversified exposure. Of course, low cost is also a benefit. Depending on the various different exposures, ETFs can provide this diversification at a competitive price. And then finally, tax efficiency. Due to their structure, ETFs versus mutual funds can help deliver better tax efficiency through lower capital gains. So as we move through time, when we think about where we are today, our CEO issues annual letter to CEOs. And this year, we came out with a statement that sustainability is our new standard. And so what that means is that we are going to embed sustainability across everything that we do. And we think about it across these four pillars. So in terms of our overall investment process, so every investor at BlackRock will be considering how to systematically incorporate ESG analysis into their investment process. The second is around our sustainable solutions. Today, BlackRock oversees roughly 500 billion in both screened and sustainable solutions. We, on the iShares side, want to be able to continue to provide choice to investors. We've committed to double our global offering. Today, we offer roughly about 80 different ETFs around the world, and we're committed to launch about 150, have about 150, I should say, in the next couple of years. And the third is around our investment stewardship. So investment stewardship is the group at BlackRock that engages with companies. So we have a fiduciary responsibility to all of our investors, and it's important that in the companies that we are invested in, that we are having this dialogue, we are engaging with companies specifically around these material ESG issues and ensuring that they are focused on achieving long-term value for our shareholders. And then finally, our overall corporate sustainability. Sustainability is completely embedded into BlackRock as a company. It is important to our culture. BlackRock has made significant strides in terms of being carbon neutral. We're carbon neutral in most of our regions that we operate, and we hope to continue to build upon that over the next couple of years. So, there are many different approaches as we think about how investors can incorporate sustainability. Probably most simply is around avoiding, right? So again, as we think about historically, sustainable investing was really defined by adding some of these exclusionary screens. We work with investors who, once again, have very specific viewpoints around certain industries that they want to avoid. And, again, as we talked about more of an inclusive approach, investors also want to advance. So it's through, on the left-hand side, broad ESG. So still maintaining whether you, have an asset allocation, you're, large cap securities, whether it's fixed income, incorporating ESG analysis into your overall investment approach. And then second, around thematic ESG. So what this means is focusing on, specific strategies that are, whether it's environmental or social or governance. Examples of that would be, a clean energy product. It would be, a low carbon approach, gender equality, et cetera. And then finally, on the right is impact. So impact is really about achieving both a financial objective and a measurable sustainable objective. An example of that would be green bonds. So green bonds are issued, in the same way traditional bonds are issued. The difference is that the proceeds of the bonds are specifically earmarked for environmental projects. So getting into the iShares Sustainable ETFs. So today we have built a platform, once again, to provide choice to investors. Across the same framework that we just reviewed, most of the products we have today are in this broad ESG category. I'm going to spend a bit more time talking specifically about what you see in that gray box, which is ESG Aware. 7 ETFs that are designed for investors who want to incorporate sustainability more broadly within their portfolios. In the middle there are thematic ESG products. Once again, I'm going to highlight some specific products here to show you some of the differences in thinking through how to allocate them within a portfolio. And then finally, I gave the example of our green bonds. We have a green bond ETF, which is BGRN. So we launched a few years ago a suite of iShares ESG ETFs called ESG Aware. So as you could see at the top there, we have 4 equity products and 3 fixed income funds. What we were hearing from investors was that they didn't want to just, incorporate, a sector exposure, that they wanted to fully integrate ESG into their entire asset allocation. So what we set out to do is develop these building blocks. And what you'll hear is how we went about that and why they are specifically designed for asset allocation. So with the iShares ESG Aware ETFs, they're really designed to deliver across three specific value propositions. So the first is around purpose and performance. These ETFs are designed to deliver benchmark-like performance, risk and return, while also achieving a more sustainable outcome. These products have lower carbon intensity versus the market cap weighted indices. They also achieve in terms of higher ESG quality. And the second is around access. I think what we found in engaging with investors was that they didn't want to just have a satellite exposure. Once again, they wanted to be able to access these types of strategies at a competitive cost. So when we think about purpose and performance, what we're showing you here is this scatter plot. You could see on the left-hand side, it's the traditional market cap weighted index, and then the ESG version. We have a risk-adjusted return measure through Sharpe ratio on the left, and then moving to the right, looking at overall ESG quality on the x-axis. And what these products are doing are exactly what they were intended to do. Once again, is to deliver a similar risk-return profile, but also have higher ESG quality. So access. So as we thought about the various different exposures to launch, it was important that we design products in the same way investors think about asset allocation in their traditional portfolios. So what you see on the left is a traditional market cap weighted total portfolio. And on the right, you could see the various different ESG tickers that align closely with the various different asset classes. So in terms of access, once again, being able to provide these ETFs at a competitive price. And you could see, versus its category peers, our iShares ESG ETFs are priced in the lowest fee quintile versus its universe. So let's talk a bit more about our thematic and impact ETFs. So low carbon. So once again, as we think about climate change, investors also fear that they, in terms of where we're seeing investor money flow, what's happening within the industry, we're seeing many institutional investors actually start to divest of fossil fuel companies. So we developed CRBN. We did it in partnership with a number of different organizations. And what this product is really designed to do is, once again, on the left-hand side, you can see it's delivering a very similar risk-return profile, but also delivering quite a significant reduction in overall carbon intensity. And so as we think about the innovation and evolution of products, what we're able to do is provide, once again, provide to investors is something that they are quite familiar with, but with this added benefit of lowering an overall carbon footprint. So the way that I would think about this product, CRBN, is that it's providing investors with a global equity exposure, similar risk return as the benchmark, while also reducing overall carbon footprint. We also offer a product in the thematic space, which is ticker SDG. So this particular strategy is focused on taking the UN's Sustainable Development Goals. There are 17 of them, identified, of course, by the UN, which is about addressing the world's most pressing needs. And so we worked with an index provider to take the 17 SDGs and turn it into an investable framework. So once again, this is a global equity exposure for investors who, are wanting to include more of an impact focus within their portfolio. You can see traditional market cap weighted benchmark, which is the MSCI ACWI, the All Country World Index, and then applying the UN Sustainable Development Goals framework. What you achieve is now, a 70% higher revenue exposure to the sustainable impact themes. So in summary, we talked about why starting with climate change, why start with sustainable, largely to do with the shifting of investor preferences, this reallocation that we're starting to see with institutional investors, and certainly the sense of urgency that we're experiencing around climate change. We also talked about what ESG means and what does it cover. ESG is really about identifying the risks and opportunities that aren't captured in traditional financial analysis. Through the emergence of data and research, what we have found is that being able to apply some of this research creates a much more robust analysis. And then third, how has it evolved? It's evolved from, focusing specifically on just excluding industries to now incorporating some of these important sustainability insights to drive more long-term results. And then finally, as we think about how to get started, we talked about some of the various different solutions that we offer. So investors who want to fully integrate sustainability into their portfolios, we have the ESG Aware suite, with allowing investors to really achieve the building blocks in their asset allocation. We talked about some specific thematic products. If you wanted to add some additional, focus around climate, certainly around impact through our SDG product. So with that, why don't I pause here and turn it over to you, Lindsay, for any questions.
Thank you, Sarah. This is definitely a good time to consider a sustainable approach to investing. I know I hear a lot of questions about it all the time. We also offer the iShares ETFs on the Ally Invest platform for our customers. Let's see if we do have some questions for you. I'll remind our viewers that we still have plenty of time to take live questions from you. Just enter them in the box on the right-hand side of the YouTube channel here, and we'll get right to them. But let's start with Benny and Mike Katz. How does sustainable investing performance compare with the broader market?
Sure. So that is a question we get all the time. And so the ESG products that we have on our platform, specifically the ESG Aware, first of all, they're really designed, once again, to deliver performance that's similar to the market cap weighted index. What we have found more on a historical basis is that we've seen some slight outperformance in these ESG products. When we turn to some of the various different other strategies, we work very closely with our European counterparts. They have a a socially responsible investing range where we've seen a much longer track record, and I would say we've seen some outperformance there as well. So speaking specifically about these indices, yes, we have seen in some cases whether they're delivering, market rate returns, or we're starting to see some, outperformance as well. To take a step back, the way that we at BlackRock think about sustainability, once again, is that investors today aren't necessarily incorporating, some of these risks that will really bear out in the medium to long term. And we believe today investors, at a minimum, will receive market rate return, right? And so much of the narrative has been, especially as you think about socially responsible investing, dating back, a couple of decades, that investors really needed to sacrifice performance in order to incorporate, some of these issues or to screen out these companies. And what we have found is that that certainly is not the case today.
It's a really good point. And you have to wonder in times like these, volatile times like these, when there's significant pressure on the market, what do you think nowadays, now that ESG and sustainable investing has evolved so significantly since when it began, do you think that we could see these types of ETFs or stocks as a safe haven in this type of environment?
Yeah, so I would say that, again, right now we are seeing a tremendous amount of volatility. My team just looked at how our ETFs performed over the past few weeks. And again, it would be a similar performance as what I just stated. We saw across our broad ESG ETFs that they did prove to be quite resilient. In some cases, there was some slight outperformance. And we also saw that through flows. So while we saw significant amounts of outflows, the bright spots in terms of flows actually globally was in sustainable. The only outflows that we saw was in one of our corporate bond ETFs at around 11 million. But beyond that, most of what we saw was actually investor money coming into sustainable products. And part of the resilience could be taking a look at some of these ESG indices from a factor perspective. We're not saying ESG is a factor, but we get the question all the time. And some of our ESG ETFs really tilt towards factors like quality and low volatility. So of course, in times of distress, and we're seeing a market downturn, these products did perform in the way that we would expect.
It could be a knock-on effect there too, but still very interesting data that you've got. We do have a question from Sunlover. How do you view solar companies through the lens of ESG investing?
Yeah, so solar companies would be evaluated like, any other company within their industry, right? So if we think about, solar companies, they could get, depending on the ESG research or ratings provider, they could get a boost, if you will, in their overall ESG quality, right? Because obviously their business is really focused on achieving more efficiency, right? Focused certainly on reducing impacts around climate change. But the way that I would also answer this is that, oftentimes you also get the question on the other side of that, which is, how do ESG companies also rate fossil fuel related companies? And, again, ESG simply is not making, let's call it a value statement. It is simply trying to say, okay, what are some of the risks and opportunities that these companies are facing, right? And how are they ultimately managing against them? But when we, kind of take a look at some of these renewable energy companies, again, if we even look at a product that we have on our platform, which is ICLN, which is, companies that are involved in renewable energy, it has been quite a strong performer. But, again, overall, in terms of ESG, they will get a benefit from focusing on, some of these climate opportunities.
Great. Another question from G-Man ESG. Where can we find the CEO and ESG data you mentioned earlier in this presentation?
Sure. So first of all, there's a number of different resources, but the one that I would point to is, a lot of our products are based off of MSCI's ESG research. And MSCI has done, sorry about that, has done a lot to try and make their ESG analysis available to the public. So on MSCI's website, actually, they've expanded the ability to actually look at companies. So you can go onto their website and you can actually pull some of the data that they're making available. There's other resources and data aggregators, whether it's Bloomberg, others that you can actually go in and take a look at, some of this data that's available. And what I would also say is, on our website, on iShares.com, what we've done is for not only our sustainable ETFs, but all of the iShares ETFs where an ESG rating is available, that this year, or excuse me, actually it was last year, we made ESG quality scores, carbon intensity metrics available for all of our ETFs.
Oh, that's really great. Transparency is always nice. We'll invest for food. It's a really great handle there.
Yeah.
What types of impacts can I achieve through investing in sustainable ETFs?
Sure. So not to make this a plug for our website, iShares.com, but what we've done is we have, for our sustainable ETFs, we've actually included access to impact reports. So anyone can go onto the website and click on the link. It's a PDF. It will actually do a deep dive into some of these quantitative metrics. So some of the impacts that you can achieve are, I would say, probably most dramatically lower carbon intensity. So, you get the impact of achieving higher ESG quality, right? Tilting maybe your investment towards better, higher quality ESG companies, lower carbon footprint. also alignment against certain sustainable development goals, right? So whether it's related to equality, climate, et cetera, you can identify that across all of our ETFs through the impact report that's available on our website. Wonderful. Oh, and gender, and I would also mention gender diversity as well. So some of those metrics are available.
Really great stuff. Well, thank you so much for your time today, Sarah. Your presentation was very timely. It's a hot topic that a lot of people have questions. Oh, we do have one more question if you have time. Joe Smith, how do you decide what social issues to build ESG funds around? That's a good question.
Yeah, it's a great question. So we work very closely with our clients. I would say that this is a quickly evolving space. We engage with our clients to better understand where they are on their sustainable journey. As it relates to, because we get this question all the time of like, how do you choose what screens to put on your products? There are some quite common ones. So I would say, for example, tobacco. Tobacco is probably the #1 most requested screen in the US. Controversial weapons happens to be the #1 screen requested in Europe. Where we're hearing more and more is around, climate. So, industries like thermal coal, right? So it's really about engaging with our clients and understanding, where they are and how to incorporate this into the strategy. I'll just, finally just mention one quick example. We launched one of the largest debuts of any equity ETFs last year in partnership actually with a pension plan out in Europe. They came to us because they specifically wanted to move their U.S. equity exposure out of traditional S&P 500 type exposures and into an ESG version. So we partnered with them to create this product, which is SUSL. So today, it's roughly about, almost a $1.2 billion ETF. But again, an example of how we work really closely with our clients.
Very cool. Really great stuff today. Thank you so much, Sarah. We're out of time. It was great having you here today to join us for our FOMO Free Financial Future conference. Thanks again.
Great. Thank you so much for having me.